Dana, I am curious here about exactly what's been driving this weakness. I know there's been a lot of talk about Estee Lauder's presence in duty-free shops and airports and how if we're not all traveling, at least not at the same level that we were a couple of years ago, that they hurt. Is that really a material issue for them?
I think the real material issue for us and the change is the fact that when you look at Asia travel retail and China, the return to pre-pandemic levels, particularly on travel retail, may not occur. It had been up to 27% of sales. It fell to 19% of sales and is going lower. It's a very high margin business. And when you have nearly 40% of your business coming from China and Asia travel retail in total, and it may not return to pre-pandemic levels, that impacts in our mind the growth algorithm and what the margins could become. So that reset with the 9 to 9.5% operating margin this year, when in previous years it had been 16, 17, even 18%, it's not just the hockey stick return to growth from easy comparisons that can help you revive. So that longer dynamic is what made us adjust our rating.
I am curious. I mean, obviously they get a lot of their revenue, like at least a third, I think, from Asia Pacific region overall here. Is there any hope that their presence in other regions, primarily here in the U.S. and the broader Americas, can make up at least for some of that drop?
We're seeing some improvement in the U.S. That is encouraging. The U.S. returned to growth this quarter. An acceleration of innovation on the product side is underway. The fact that even the MAC brand in makeup, globally, it showed increases in makeup and in skincare is encouraging. But you still need to make up for this Asia weakness that will take time. So I'm anxious to see, as they progress, what that path looks like.
So you do note that, of course, there is a return to growth in Americas. That's encouraging. Is there any hope that Americas and those other regions that Romaine mentioned could eventually offset what we're seeing in China, or is the disparity too great?
Right now, the disparity is too great. Yes, we're going to go up against easier comparisons when we get to the first half of calendar 2024. But those easier comparisons, you also need the Americas to continue to see accelerating growth, so we drive those sales increases and drive profit margins. Estee Lauder is a company with wonderful brands. We know that the beauty category continues to be solid. You have a changing dynamic with the potentially overexposure to Asia retail, travel retail is what's leading to this prolonged period of weakness in the margins. Let's see it progress and see that path go forward.
And let's talk a little bit about what's been going on in the shares this year. Obviously, you just downgraded the company to market perform, but you take a look at shares down 55% so far in 2023. I mean, how bad is sentiment on this stock, and is that warranted?
Keep in mind that you've had a company that typically has not only met expectations, but beat expectations. They had a wonderful year coming out of COVID. The reset that's happening both in SKU rationalization, Asia travel retail, has been a real impact. I think you're having a change in shareholder base given the fact that you've had this level of share price depreciation. And now the ability to meet and beat, that needs to come to the forefront again. And I think the confidence in the game plan, I think that's what's showing in the share weakness currently.